reminder, today is March 14th, 2018, Wednesday. As I record this video, market should be open another 2 hours and a half or hour and a half or so. So you should be seeing some flashing lights on your left. Again, my name is K Kim with the Traders Club. Welcome to the market update. I know what you're thinking. It's Wednesday. It's already market update. Well, last Friday, what happened was last Friday, I actually forgot to mention that there will be no market update video this Friday because I'll be traveling this weekend. I'll be in LA. So I forgot to mention, I actually said on the last Friday's video that I will come back to you on Friday and talk about these levels. So since I did promise that I'll come back, I can't do it Friday, but and tomorrow I'll be busy packing and things like that, so I thought I'll do it today, Wednesday. So this will be the market update video for this week. There will be no market update this Friday. So we'll do today, and then we'll come back next Friday, and we'll skip this Friday since I'll be traveling. Hope you guys had a good week trading this week. I do have a special promotion today for investors. I will talk about that towards the end of this video. And first, let's look at Spider. We're gonna be looking at Spider, IWM and Qs. Well, let's follow up with what we've been talking about in the last Friday's market update video. We talked about last Friday that this gap area is probably going to act as short-term resistance. A lot of times these gaps is going to act as minor term resistance when it comes to that level after falling. And this was obviously downside gap, and then the price fell. And a lot of times when price gap back to that level, these gap areas going to act as minor term, short term resistance. And the opposite is true. A lot of times these gap ups, as you can see this gap up, right? That gap is acting as support today. So right now we're sandwiched between this gap down from that happened in February 2nd, and then this gap up that happened in March 9th. So that's what we're seeing, resistance here and support there. Keep that in mind. 10 EMA is acting as support in the micro term here. You can see that 10 EMA did act as support back in March 8th. That little kind of a very light blue line right there, that's a 10 exponential moving average. So that acted as support. We got up, we pulled back, and in the intraday, you can see that the price breached below this gap here, but the 10 EMA was residing in that vicinity exactly. That's where we found support this morning. So right now, I think these are two levels to look at going into next week, or remainder of, obviously this is a level to look at here, 10 EMA and the gap area, remainder of this day and tomorrow and remainder of this week. I think as far as minor term, like a short term bullish pressure is concerned, I think minor term bulls want to see this gap remains open. Actually, if you look at your intraday chart right now, that gap actually remains open. It hasn't been fully filled. We are still, with this much gap is actually still open. Actually, that's a good sign in the minor term. If we can able to kind of protect that gap, I could say that, in micro term, sentiment is still bullish since we're staying above the 10 EMA and we are trying to, bulls are trying to protect this gap. I think if we can do that, I think a micro term, very, very short term, we're talking intraday basis, I think, as long as we can keep that open, that gap open, benefit of the Dow goes with buyers. However, tomorrow we can just gap down, we can have another shenanigan sell-off tomorrow. If that's the case, then maybe the gap fill could happen. If the gap gets filled, again, the gap area could act as support, gap fill also could act as support. If this thing actually gaps down tomorrow though, things could get hectic for the bulls, right? If this thing gaps down, what could happen is we could have island reversal in our hands. So bulls don't want to see that. Obviously, short-term bulls. I'm a bull, and that doesn't mean it's the end of the world if we do see island reversal. What that's going to do is it's just going to make things very hectic. And once we see that island reversal happening, what could happen is this thing could come fizzle and some shenanigan, and it's gonna make things pretty hectic. So let's see how that plays out though. I mean, we may or may not get there. Let's not get too ahead of ourselves. We always want to do our analysis based on the tangible data at hand, which is this is where it's at today, right here. So tomorrow, if we see island reversal, I guess we'll have to cross the bridge when we get there. So let's see if we see that. If not, if we can see that 10 EMA acting as support, and if this actually becomes some kind of a bull flagging pattern, which is also a possibility that potentially we can continue higher. Potentially we can continue higher. If we do continue higher, we want to see at least, you know, price getting back above 278, 28 or so. If we see a candle, something like this, bullish candle, then maybe it's going to come and fill the gap, pull back a little bit, continue fill this gap again, pull back a little bit, and then continue on higher. That's also the possibility. I think the best case scenario for the buyers, let's say if this thing does continue higher and then just gaps it over, right? Gaps it over. If we do see something like that, just remember we just talked about the island reversal. Well, this could also become that big island if we see something like that. Again, I'm just getting too ahead of myself, but just giving you guys different possible scenario, because if something does happen, you know, remainder this week and next week, you're prepared for that. So keep that in mind. But I want to give benefit of the doubt to the buyers as of today in the minor term that we're staying above 10, 50, 20, and 100. You can also draw your uptrend support line like this. Should the price continue lower and fill the gap, we got the 50 EMA there coinciding with this uptrend support, 20 EMA also in that vicinity. Also, you can draw this support which is coinciding with that 100 SMA in that vicinity. So should the price decline, some of those levels to watch. Should the price continue to rise higher, we got these gaps to watch. And if we can gap that over those gaps, that will give a lot of jump start for the buyers. So let's see how that plays out, and we'll follow up next Friday, not this coming Friday, but next Friday, and we'll talk about it and see how it played out this coming, you know, how it played out this week and remainder of this week and the next week. IWM is actually looking much more bullish than Spider, because you can see we have a very, very well formed and cultivated higher highs and higher lows. So it only makes sense that this thing comes down a little bit, maybe form a higher low before going higher, or is this some kind of a bull flagging pattern right there before going higher? We haven't even touched 10 EMA. Remember, on Spider, we are retesting that 10 EMA. On Russell, we're not even close to 10 yet. So let's see. And that's a strong support right here, the prior resistance level. And also I can draw support like that or something like this here. So we got a lot of support levels should the price decline the remainder of this week or next week. Some of those levels to watch. Let's look at the Qs here. Q's now retesting prior resistance as potentially a new support here. Q's is actually up 0.3% as of now as I record this video. So we're showing some relative strength. 10 EMA is in that vicinity. This gap has not been filled. So you can see the gap area, which is going to act as support, prior resistance, which is going to act as support, in the vicinity of 10 EMA, which is going to act as support. Again, you can draw something like this. Something like that should the price decline, and if it continues lower next week or this remainder of this week, a gap fill, a lot of times, you know, when the gap gets filled, it's going to act as support. What we don't want to see is a gap down. What the bulls don't want to see is a gap down and making this into an island reversal. If that happens, that's not the end of the world. It's just going to make things a little bit hectic. If that happens, we got 50 MA here. We can draw a trend line there. We got 20 MA here. We got 50 MA there. We got some support here. So that we'll talk about that if that happens next week, next Friday. But for now, I want to continue to give benefit of the doubt to the buyer. So that's my analysis. I do have a special promotion for my membership, for investor membership. I'm actually trying to grow it because compared to my other membership, I don't have many members in this membership here. So I'm trying to grow. Usually it's $350 and for investor here, but I want to give you a special promotion if you sign up. I'll actually open this until I don't know, today's Wednesday, Thursday, Friday. Saturday, Sunday, until Sunday. Sunday evening, I'll keep this promotion open so you guys have a good time to think about it and sign up. But it's $350 a month. But I will go to $290 a month, and then probably about a cheaper price for if you sign up yearly. So what you get is long-term stock picks, updates when to add or exit. You also get positions review, special report, and monthly video. So it's not $350, it will be $290. And recently I just did a video. I just did that yesterday, last night, and currently basically going over every single long-term position I'm holding. So with the investor, this is for investors who want to own multitude of stocks to hold for long term to grow your portfolio. There's no option trading in this. This is for long-term investing strategy, right? And it's not like passive buy and hold, because I want to take advantage of the fluctuation. So it's not passive, just buy and hold, forget about it. It's not like that, but I will hold positions 2 to 3 years, 3 to 5 years, and I will take advantage of cycles of primary term, intermediate term, up and downs, where I'll be closing maybe some, maybe I add more, but core position I'll be holding throughout. And I want to tell you that this is probably the best time to get into a long-term position. I really don't recommend options trading if you're new to this, because man, options trading, especially if you have a smaller account size, is really good. It's very deadly. A lot of times, a lot of people want to, trade options, get rich quick. Well, 95% of the time, you're trying to get rich quick, especially with the smaller account. It's deadly. You'll wipe out your account. I've known a lady who had $1 million who wiped out her entire account in 6 months, less than 6. It's a true story. When Apple crashed back in 2012 in September, and she shared me with that story before she signed up. But anyway, I just did this yesterday, and I am holding currently about 30 positions, and I'm gonna share with you what are some of those positions. But there's also this member-only video where I believe that we're in this generational opportunity, where I believe that Dow can reach 160,000. And I'm talking next 15 years. 15 years. So, and this is about 1 hour member only video. I explain why this is a best time to invest in the overall market. And this generational opportunity only comes every 40 years. And let me explain what I mean by that. And you can see right here, this is Dow Jones Industrial Average. What happens is the market get into a sideways market, usually 20 years or something like that, and then you get a 20 years of move. And the market get into about 20 years or 30 years of maybe a consolidation, and you get about 20 years of move. Market get into another cycle of 20 years of bear market or sideways market, and then you get into about 20 years, 15 years sideways up move. And you can see right there, you get another 20 years, close to 20, and I think recently we had about 17 years consolidation. Now we're just breaking out. So there are levels, because if you went long, if you start investing up here and you waited 20 years, you're breaking even. You bought at the top right before the dot-com bubble, and you waited 16 years, you're still breaking even, right? So there are actually cyclical time where you should be investing, because if you start investing up here when we're in a sideways bear market, that long-term position is really not doing a whole lot. And I also want to give you difference with when investing on a sideways bear market versus in a primary term up move. Think about this. This is a 1987 Black Monday. Everybody talks about this time. But that's not the time you should be scared of the market, because sideways bear market is more deadly than this. Because let's say you're just very ignorant, you didn't know anything about stock market, you just got very, very unlucky, and you bought right at the top, right the day before a Black Monday, and you held 13 years. Do you know how much in gain you would have on the NASDAQ? 1,000%. But if you actually bought it in 2000 and then held 13 years, you'd be down 30%. Let me demonstrate that for you guys right now. So NASDAQ composite here, there you go. So you can see, let's go to log chart. I'm gonna move that, make it clear. So you can see right here, that right there, ladies and gentlemen, that's 1987 Black Monday, how so many people are scared of. Everybody talk about that event. Remember what I said? That's not scary part. Actually, if you actually bought just the day before 1987 Black Monday, we're talking investing. We're not talking trading options, short-term swing trading, none of that. We're talking, and then from 1987 until 2000, you held for 13 years. Your gain is 1,000%. 1,000% on the NASDAQ. 1,000. Okay? Right now, let's say you bought it right before in 2000, right? Right before the dot-com bubble crash in 2000 and you held 13 years, you're down 25%. You see the difference? This is why this is very, very important to understand when to start investing. You don't want to invest when we're getting into sideways market like this, because you'll hold 16, 20, 25, 30 years and you'll get nowhere. What is the best time to invest? Here, 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 here. Any of these levels. Any of those levels, right? You want to get into the market when we are when we resume in this major primary term uptrend. And this is the reason why I have actually many special reports talking about this matter, how we can take advantage of that, right? So this chart right here is leading economic index. I will just go quickly here. This will give us kind of a quick overview of how healthy our economy is and how the stock market is going to go. Basically, if you look at this is a death cross, this is golden cross, right? So that's the golden cross right there. So what we can see is looking at LEI and CEI here very, very quickly. But really though, it gives us actually a warning, prior warning, about a year and 2 years warning there. And you can see here, 2007 and 8, it gave us that bearish divergence warning before the crash or economic recession. Same thing in 2000 right there. We saw that warning. Right now you can see that we are in a healthy matter in the overall economy and the stock market. But what's really interesting is that this right there after this dot-com bubble crash in 2003 gave us that golden cross where the market is healthy. Well, here you can see that the golden cross just happened in mid-2016. It's telling us that bull market, because this was a recovery phase, bull market is just starting out right now in middle of 2016, that's when it just started. What I'm saying is we are just coming out of long 16, 17 year bear sideways move. We're now just getting into the secular bull market. If you've been following me, 2016, middle of 2016, I've been doing videos why I believe there's a 5-year bull run is coming, why secular bull market is ahead, maybe 10 to 15 years, 5 reasons why stock market crash not. There are many videos I've done back in mid-2016. That's when I came to a conclusion that the market isn't going to crash. Not only it's not going to crash, that it's going to thrive. You guys remember that. Well, this chart right here confirms what I was talking about. Today is 2018 March. It is not too late. So here, what I want to do is this. So let's go to Amazon first. Do you want to go long? Do you want to go long here? Do you really want to go long there? And I'm not knocking the astute investors who's been buying it up and they're reaping the harvest, reaping what they've sowed, and they were patient and they have every right for bragging rights and to enjoy their gain. I get that, but do you really want to buy Amazon up here? And you could continue higher, but do you really want to buy up there? Where would have been the best time to buy Amazon? Well, when this thing broke out, and when we retest that breakout level, that would have been, and then 117.98, and I have a special indicator here. It is, actually, let's not look at that, it's too much right now. But where do you think the best time is? Right when it broke out and retest after long consolidation. You want to go long here? I don't want to go long there. Looking at Netflix here. Netflix, same thing. Where do you want to go long? Do you want to go long? Do you want to go long up here? No, but when it came out, broke out and retest this level at 45 level, that would have been the best level to start accumulating and buying some of these shares, maybe accumulate some shares, maybe close a little bit, add some more and just ride it and grow your portfolio. Again, kudos to those astute investors who've done that and enjoying the benefit. But people trying to chase it up there, it's foolish, right? You don't want to do that. VRX, where would have been the best time to go long? Well, right there. So you can see right here, we got prior resistance, and then we broke out and retest. And then Bill Ackman started going long up here. I think he started going long right here or something like that, and then started really going heavily here. And then he lost, what, 2 billion, 20 billion? I'm not sure, but lots of money. Obviously, he really didn't understand technical analysis. This is a level to start selling. This is a level to start maybe close out some positions, maybe add more on this pullback. But when it gets like this, you start closing out position. Best time to go long is here. And Microsoft, right? Microsoft, when is the best time to go long? Is when this thing breaks out of it and came to retest this level. That's 41.74, 42-ish level is the best time, and add here. And then as it starts to move, close out some positions, maybe 20%, 30%, 40%, 50%, and then continue to ride it and enjoy this gain. Well, you ask me, okay, yeah, Amazon, I get that. Amazon, Netflix, VRX, I get it. You know, they made a lot of, so I mean, how can I invest? Don't invest in these. You guys remember, if you follow me on Twitter and StockTwits on my blog, you know I've been long on Intel. Where? Well, I started buying it up here and start adding on these pullbacks. I'm still holding full positions. I've been writing this. I've been talking about how Intel is set to soar. I've been writing my articles back in like late 2016. You guys know that. What is another one that I have long on Cisco? Full long. I started buying Cisco down here. I'm holding full, start adding a little bit on some of these pullbacks, right? So you don't have to go long on Amazon. You don't have to go long on Netflix right now or VRX, Microsoft. There are plenty of setups you can still do. What else? What else? Intel, Cisco. You know, I've been also, you know that I've been long on Twitter, right? I've been long on Twitter. I've been publicly writing articles. I've been long on Twitter since 19s, right? I'm gonna hold this as it starts to move higher. I probably in this video that I've done, just did it yesterday, every single one of my positions in that video and that setup that I just given you, the setups that I given you like Intel and Cisco, that looks a lot like how Netflix, Amazon, and Microsoft VRX is like. Also, I have another one on CA that hasn't broken out yet, but we are just trying to break out of this 20-year consolidation. I have setups like this, more than 20, that I'm currently holding in my portfolio, and these are long-term investment stocks. So I'm just trying to give you guys these, you know, some of these picks where I'd rather be, and also another one, I'd rather be in stocks like these where it has a long base, it broke out in a retest phase for that, rather than going long on Netflix. Again, it's great if you've been long on Netflix since 70s, 80s, 100s, and you've been, you know, benefiting. That's great. But this, I really believe that this is a level that you want to start, you know, closing out some position, but still hold some. Just in case it continues to move higher, still hold some, but if I was holding it since like 50s and 60s, I'll probably close 80, 70 of my positions here and then hold about 30, right? This is not a level to start going long on Amazon, but there are other stocks, and like I said, I got 20 and 30 of them that I went through, every single one of them here, monthly report that I just published yesterday. So again, I think this is the best time to go long on the long-term picture. We're probably going to encounter pullbacks on the way, maybe even something like Black Friday or Black Monday type of incident. However, like I said, going long on top here and holding for 13 years on the NASDAQ, that gave you 1000% advantage versus going long right before the cyclical sideways move. After 13 years, you're down 20%. It's a difference than as an investor, what you should be scared of is a sideways bear stagnant market. But when we're in a full throttle uptrend, yes, it's gonna have a pullback. Yes, it's gonna even have like Black Friday type of move. But if we understand, obviously, you know, we'll deal with it when we get there. What I would try to do is, right, because I have every tool to gauge these type of just huge pullbacks or corrections. So what I would normally would do is that right before the Black Friday, Black Monday, I'll probably close most of my position. I'm not going to completely close them up, but as much as I can, and start getting into some hedging position to protect my long-term investments. And then when this thing pulls back like this, when everybody start panicking, what do you think I'm going to be doing down here? I'll be buying that dip pretty hard. So I think 1987 stock crash may be coming, not this year, maybe next year, but I'm not sure. I have to continue to kind of monitor that, but I have every tool to gauge possible scenario of that. And when that happens, ladies and gentlemen, I will be preparing for that, and I'll have hedges on. I'll close most of my positions, and then when this thing pull back, or when this is crash, quote unquote crash, I'll be buying this dip very, very hard for this kind of move. Remember what I said, you don't want to be scared of sideways, you don't want to be scared of this pullback, especially if you're a long-term investor. These corrections in between, that's an opportunity to add. What you should be scared of is sideways market, that stagnant sideways market that really kills the investors, really kills us time. So this cyclical move only comes every 40 years. So I think it's still a very, very good time to take advantage of it again. So it's a $350 a month normally, but I'll do it for $290. If you sign up today and until Sunday, $290 a month. And if you sign up yearly, obviously it'll be a better deal. So I'll have that link ready for you towards the end of this year and end of this video, and then a description section below. And then once you sign up, you get you'll get access to these monthly reports and these special reports, so you can understand exactly what's going on. And in monthly report, I'll go through every single one of my positions, and I'm holding about 30. And like 20 of those, like 15 to 20 of those, looks exactly like Netflix setup before that thing just went crazy. Amazon, it looks like Intel and Cisco and all of that. So there's a whole lot of picks, and the market as of today looks very long term, very bullish. And I believe the market is going to have its correction up and down, but I believe that the market is going to thrive for the next 10 and 15 years. And I'm not kidding about this when I say this. I believe that Dow could and it may not get to 167, maybe 100, maybe 120. But really though, what's really important about this video is a generational opportunity. It only comes in every 40 years. And in 40 years, man, that's somebody's life career. So just understanding the cyclical part of it, and not only just the cyclical part of it, as I go through all of my long-term analysis, we're talking deep, comprehensive, technical analysis, which I go through every single monthly video that I do with the monthly report. That where market is healthy, it's ready for about 10 to 15 years of move. Again, it's gonna have its corrections. It may even have a 1987 Monday style type of crash or correction. But when you're getting the thriving market, that's not the events that you should be scared of. That's the events that you should take advantage of. So I'll have the link for you guys, and I hope you can join me on my investor plan, $290 if you sign up today until Sunday. And I actually love investing more than trading options, because it's such a peaceful and calming experience, because you can hold things much longer term when this is the best time to do it. And I love every single one of my positions, they're set for a very, very big gain. And I am very excited for this. So I wish to share some of those positions with you. I mean, all of those really with you. And then I will basically every time I get into a new one, you'll get it. You'll get the email to say and updates when I'm adding or exiting. And once in a while, you get some long-term updates on the market, but you get full review and special report, monthly video. And so that's the membership there. So hope you guys can join me in this endeavor, in this lifetime journey of investing. And well, you guys have a great week, great weekend. This Friday, there will be no market update, but I'll come back to you next Friday and we'll talk about those. Come join me in an investor membership. Have a wonderful weekend and have a wonderful week. And good luck trading remainder of this week. And